The whole GameStop saga is pretty much getting out of hand. Let's just recap from the top again, shall we? It all started out when hedge fund managers were shorting GameStop for the past 4 years. So GameStop stock has always been on a downward trend for the past 4 years, and it's pretty much went from 33 all the way down to as low as $3, almost a 90% drop, even though the fundamentals didn't change. So obviously it's overshorted, and then a Wall Street bad user who goes by the name of Deep Effing Value, or his real name Keith Gill, started to buy up shares of GameStop because he knows it's overshorted and he's been sharing his progress for the past 2 years. And then on January 11, 2021, Ryan Cohen was announced to take over GameStop. He was a successful founder of Chewy who brought the business up to a $45 billion value. So this triggered a huge wave of buyers for the stock. And it also triggered a huge wave of people to join Keith Gill in doing a short squeeze out of the hedge fund managers who are shorting this. Hedge fund managers are down by the billions, and it pretty much sparked a whole new revolution. However, things went awry because the hedge fund managers started to play dirty. They started going onto mainstream media to accuse Wall Street bad users of manipulating the stock, and things got even worse when brokers themselves started to ban people from buying GameStop. One of the most notable brokers is Robinhood, and we all know they give a pretty much crappy reason, saying that they're trying to protect their users because of the insane volatility. Fortunately, we had Elon Musk questioning GameStop's CEO on the reason behind this decision. So Philip went on to reveal that Robinhood was actually demanded by the clearing agency to deposit a $3 billion deposit. Although there was no clear reason given, but I will probably say it's because SEC wants them to be able to cover the earnings made by all the GameStop investors, especially when brokers are at a disadvantage because they've pretty much overlent the hedge fund managers and are operating at a huge paper loss. Kind of like an insurance from the SEC, or should I say insurance requirement, and I frankly think this is a legit reason for users to accept, but obviously our Robinhood chose not to review all these details, so it sparked an uproar. It definitely could have been better communicated. So now we have a situation where retail buyers pretty much can't buy GameStop stocks, while hedge fund managers can continue to short it or cover their positions. And things continue to spiral downwards even more because the mainstream media started to talk about silver and even started to make some false statements that users are speculating on silver and targeting it as the next short squeeze. This was fiercely disputed by Wall Street bets. They are mostly not buying into silver, apparently what most people are saying. So it's pretty insane, we have the mainstream media and the hedge fund managers teaming up to draw attention away from GameStop so that retail buyers stop trying to buy it. Unbelievable. So GameStop's price has pretty much been tanking. Unfortunately, went from a high of 480 all the way down to 111 at the time of this recording. Because we have a situation where retail buyers still can't buy GME, and hedge fund managers can still continue to short it or cover up their positions. At the same time, we've got Mark Cuban who did an AMA on Wall Street bets, so basically everyone could just ask him anything. It was a pretty interesting session, but I think there were two key takeaways from Mark Cuban. He reminded everyone about how the stock market works. It works on supply and demand. So when Robinhood shut down our ability to buy the stock, there is no demand for it, and it has been artificially cut off. So people can sell, and it brings the stock down, and they start to trigger margin calls, they start to trigger stop losses, and they start to take people out of the positions, and it triggers a whole facade. The whole wave of selling, and we could actually expect it to fall back even further. And he actually said if you can afford to hold the stock, you hold. He doesn't own it, but that's what he would do. And the reason for that is when Robinhood and all the other brokers start allowing people to buy it, we are probably going to see it rocket back up. And there's absolutely no doubt that hedge fund managers and the big players started to short this stock again, started to open new positions. At a time like this where nobody can buy. So they've probably made some good money pushing it down further, and maybe they want to consider taking profit off the table already before the brokers start allowing us to buy. And that brings us to his second point. His second point was there was only one thing that we all messed up, and that was choosing Robinhood and any of the zero commission brokers who simply did not have the capital. They don't have the capital for this kind of situations. So the takeaway point is, we switch to a good broker who is financially strong, has at least trillions of assets, trillions of dollars worth of assets, so that they can cover all this situation when things get too volatile. So diamond hands, hold the line. I am not a financial advisor. This is just my opinion. I am personally invested in GameStop, just a very small amount. I did it because, I just basically wanted to make some, good earnings from here, from the short squeeze. And at the same time, I'm willing to hold this. This is such a small percentage of my portfolio. I'm more invested in Tesla. I am not pouring my entire life savings into GME because I can't afford to. Do I think it can still recover? Definitely. That's why I'm still holding. Once the whole artificial suppression of demand is gone, we can expect all the pent up demand to come in straight away, and we could just probably expect this to happen. Definitely not selling out at a loss right now, and I hope you guys hold it too.